Welcome. In this video, Xcn coin bullishness has arrived. Will it continue? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. The inverse shoulder-head-shoulder pattern is an important reversal pattern that traders often follow to find buying opportunities, as it is considered quite powerful in terms of technical analysis. This pattern usually signals the end of a downtrend and the start of a new uptrend. Looking at the current structure, this inverse shoulder-head-shoulder pattern is quite clear and distinct, with the left shoulder followed by the head and then the right shoulder starting to form. A classic reversal signal has come to life on the chart. One of the most striking aspects of this pattern is that the head marks the low of the price, and the recovery process that starts from there is an indication that the downtrend is now starting to run out. The strong buying reaction, especially from the head, shows that market participants are reluctant to lower the price below this level and that this area is a strong bottom. With the formation of the right shoulder, we can safely say that investors are now starting to give up bearish expectations, and the price is more likely to head higher. In order for the pattern to be completed, the price must break the horizontal resistance, called the neckline, upwards. When this breakout occurs, the target of the pattern in technical terms refers to an upward projection up to the vertical height of the head zone to the neckline. So, in the current situation, it is quite natural to expect a technical rise up to this height. The price currently seems to have made this breakout and is moving slowly but steadily towards the target. Such slow but safe rises are considered a sign of sustainability by investors and are considered healthier than sudden fluctuations. Such a steady rise in the price is also one of the most important principles of technical analysis. The pattern target realization rate also provides positive data. Inverted shoulder-head-shoulder patterns have a high success rate based on historical data. Especially if the trading volume increases during the neckline breakout, this further strengthens the validity of the pattern. If there is an increase in volume data in the current situation, this further reinforces the possibility of the price reaching its target. Inverted shoulder-head-shoulder patterns have an impact on market participants not only technically, but also psychologically. A decline in the left shoulder can create a panic, while a deep decline in the head can drive most traders away from the market. However, the formation of the right shoulder and the subsequent rise indicates that investor psychology is starting to turn positive again. This signals a return of confidence in the market and encouragement for investors to buy. If the price starts to move upwards in line with the pattern target, supported not only by technical, but also by fundamental analysis, this could pave the way for a much stronger rally. For example, if positive news flow, increased liquidity in the market, or macroeconomic developments support this technical structure, it may only be a matter of time before the target is reached. In addition, this type of technical structure makes it very easy for traders to identify stop loss and take profit zones. The stop loss is usually set slightly below the head level, while the target price is set above, measured by the height of the pattern. This provides a very efficient strategy in terms of risk-return ratio. In the current situation, the fact that the price is moving steadily towards this target is another factor that boosts traders' confidence. The slow but steady rise in the price at the moment shows that the market prefers to move slowly and that this rise is healthy. Such a controlled breakout, rather than rapid rises, is usually more permanent and allows the price to reach the target without correcting in the later stages. But we can't decide the analysis with the pattern alone. Let's look at the other metrics. Stay tuned. A careful look at the chart reveals an important resistance zone where the price has reacted downwards many times before. This is an area where investors have previously turned to profit-taking, thus concentrating supply. Resistance levels are very critical areas in technical analysis and are considered to be points that can stop the upward movement of the price for a while and even cause a pullback from time to time. However, the constant testing of such zones and the fact that they become less effective with each contact can eventually herald a strong breakout to the upside. In the current situation, the price is approaching this resistance zone again, and although it is likely to experience some difficulty here, as it did in its previous attempts, the fact that it has repeatedly tested this zone may indicate that the seller's strength is now diminishing and the buyer's pressure is increasing. This means that a stronger uptrend could be triggered if the price breaks through this zone. Resistance zones in particular tend to weaken over time, as investors' selling interest at these levels diminishes with each contact, and eventually the price crosses the level, gaining the potential to reach new highs. From this point of view, each contact of the price with the resistance zone can be interpreted as a technical signal that the supply at this level is being gradually eroded. In particular, The increase in trading volume at such contacts indicates that the buying pressure is strengthening. If the price breaks through the resistance level this time with high volume and strong candlestick patterns, there is a high probability that this breakout will be permanent and not fake. This could create buying opportunities for both short-term and medium-term traders, allowing the price to move quickly to the next target levels. Also, a break of the resistance level could trigger the often observed broken resistance becomes support principle in technical analysis. This means that if the price pulls back after the breakout, the previous resistance zone will work as support this time, pushing the price upwards again. This would be a confidence-building element within the technical structure, and traders may consider such pullbacks as buying opportunities. A resistance breakout is not only important from a technical point of view, but also from an investor psychology perspective. Because when an area that has been impassable for a long time is finally broken, many investors see the breach of this level as a confirmation signal and move in the direction of buying. This can lead to a sudden intensification in demand. If the price fails to break through this resistance zone and bounces back, this is not demoralizing but rather a correction and a resting move to gather more strength in the market, because sometimes the market needs a breather to continue upwards. Such small pullbacks are considered healthy ahead of a major breakout and provide an opportunity for traders to reposition. So even if the price returns from this area, it doesn't necessarily mean that it's bearish, but rather that it's more likely to come back stronger on the next attempt. In addition, the general market mood, news flow, and macroeconomic developments may also determine whether this resistance level is broken or not. If such external factors are in favor of the price, that is, the market is in a positive mood in general, this resistance can be overcome more easily. On the contrary, it may sell off from the resistance again, but if the selling remains limited, the chances of a rebound increase. In short, this resistance zone that the price is currently facing is a technically critical area. The price may have reversed from this area several times in the past, but each new contact has the effect of weakening this level. If the price manages to break through this area this time, the uptrend may not only be limited to the next resistance point, but could also open the door to a broader uptrend with a strong acceleration. The MACD indicator is one of the most effective tools used in technical analysis to detect trend direction, momentum, and potential turning points. Looking at the current chart structure, we observe that the MACD lines are exhibiting an upward momentum. This upward trend is a strong signal signaling that buying pressure is increasing and the market is gaining positive momentum. In particular, the MACD lines moving above the signal line and the continuation of this movement above the zero line may be a sign that the market is on a solid bullish ground. In the current situation, the MACD histogram is also getting wider and wider, indicating that the momentum is getting stronger. If the MACD lines accelerate further upwards, it would not only be a confirmation of the current bullishness, but also a harbinger of potentially stronger price action. This is because an upward widening of the MACD is often like a path opening up in front of the price, sort of like an engine revving up. This is an important indicator that the market will continue its upward movement, especially in an environment of positive momentum. We should expect the MACD lines to rise. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.